Right now, as we speak, Wave Life Sciences is trading at exactly 19.85 USD, pushing up by 1.33 points or roughly 7.17% on the intraday chart. If you are watching the ticker tape, you are seeing a stock that is not just moving on vague sentiment, but is reacting violently to a fundamental shift in how the market values its proprietary genetic medicine platform. Most investors look at a biotech chart like this and assume it is just another speculative pop, a classic buy the rumors, sell the news event common in the pharmaceutical sector. That is the expectation, that this is a fleeting moment of volatility driven by day traders on Robinhood or volatility chasers on interactive brokers. The reality, however, is substantially more complex and suggests that the market is finally waking up to a technology that does not just treat disease, but rewrites the instructions for how the body heals itself, specifically targeting the holy grail of the current pharmaceutical landscape, obesity with muscle preservation. When you see a move of over 7% in a single session for a company like Wave, you have to look past the green candle and ask what is fueling the engine. The headline driving this momentum is the interim data from their Phase 1 INLIGHT trial for WVE-007. Everyone knows the weight loss market is dominated by GLP-1 agonists, drugs that have made Novo Nordisk and Eli Lilly titans of the industry. But there is a massive unspoken problem with current weight loss drugs: muscle atrophy. Patients lose fat, but they also lose lean muscle mass, which is metabolic suicide in the long run. The expectation was that Wave Life Sciences was just another late entrant trying to grab crumbs in the obesity market. The reality, confirmed by this fresh data, is that WVE-007 is behaving exactly as designed, silencing the INHBE gene to burn visceral fat while potentially preserving muscle mass. This is not just a Me Too drug. It is a corrective evolution of the entire weight loss thesis. This is why you are seeing volume spikes that rival the attention usually reserved for a Tesla stock breakout or an Nvidia stock earnings call, albeit on a different market cap scale. Let's pull back and look at the broader context of how this trading day is unfolding. We are seeing a rotation in the broader markets. While capital has been parking itself safely in mega-cap tech for months, we are finally seeing risk-on behavior trickle down into high-beta biotech names. When you log into your Fidelity Investments account or check your Schwab Intelligent Portfolios, you might notice that the growth sector is starting to look very different than it did 6 months ago. It is no longer just about silicon chips, it's about biological software. Wave Life Sciences represents this shift perfectly. They're not editing DNA, which is permanent and carries off-target risks. They are editing RNA, the transient messenger. This distinction is critical. If you edit DNA, you are changing the hard drive. If you edit RNA, you're just changing the temporary file. It's safer, it's tunable, and the market is realizing that this approach de-risks the clinical pathway significantly. I want you to pause for a second and think about your own portfolio. Most people are heavy on tech and light on speculative bio because the science feels impenetrable. But look at the volume today. Institutional money is flowing in. Comment below how many shares of Wave Life Sciences you currently hold, or if you are sitting on the sidelines waiting for a dip. I want to gauge the sentiment of the room right now. Are you chasing the breakout, or are you waiting for the dust to settle? The movement we are seeing at 19.85 USD is also heavily influenced by the company's recent financial maneuvering. Just yesterday, the company announced a massive $200 million plus public offering. Profound. Normally, when a company announces a secondary offering, the stock price craters because existing shareholders get diluted. Supply goes up, price goes down. That is economics 101. But look at WVE today. It's green. It's up over 7%. When a stock rallies in the face of dilution news, That is one of the most bullish signals you can ever find in the financial markets. It tells you that institutional demand is so high that they are absorbing the new shares and asking for more. Big funds, the kind that operate through Fidelity Wealth Management or huge interactive brokers' trading desks, are likely gobbling up this offering because they see the cash runway not as a liability, but as a war chest to fund the Phase 2 trials for their obesity and alpha-1 antitrypsin deficiency programs. Let's analyze the technical architecture of this RNA editing platform, because if you don't understand the how, you cannot value the what. Wave uses a proprietary platform called PRISM. Most older biotech companies use what's called antisense technology that is somewhat random. You throw a lot of molecules at the cell and hope some stick in the right way. Wave creates stereo-pure oligonucleotides. Imagine you're trying to fit a key into a lock. Traditional drugs are like a handful of keys where some are bent or jagged. Wave's technology ensures every single key is cut perfectly to fit the lock. This increases potency and reduces side effects. This is why their Duchenne muscular dystrophy candidate, WVE N531, has shown such promising exon skipping data. The market had largely written off the DMD space after so many failures by other companies. But Wave's data showing significant dystrophin production has forced analysts to recalculate their models. We also need to discuss the GSK collaboration. This is not just a small licensing deal, it's a validation stamp from a pharmaceutical giant. GSK put down substantial cash, $170 million up front, to get access to Wave's WVE-006 program for alpha-1 antitrypsin deficiency, or AATD. AATD is a genetic condition that destroys the lungs and liver. The standard of care is weekly infusions that are expensive and burdensome. WVE-006 is designed to fix the broken RNA so the body can produce the correct protein itself. If this works, it's a functional cure. The fact that GSK, a conservative British pharma major, is betting heavily on this platform provides a safety net for the stock price. It means that even if the general market enters a downturn, Wave has a big brother with deep pockets and a vested interest in their success. Investors who use platforms like Robinhood or SoFi Invest often miss these institutional details. They see the price ticker moving and react to the percentage gain, but the smart money, the people utilizing Fidelity ETFs or engaging in serious interactive brokers' trading desks, are looking at the mechanism of action. They're looking at the GSK deal terms. They're looking at the cash burn rate. Wave had a cash runway extending into late 2025 before this new raise. Now with the fresh capital, they have pushed that bankruptcy risk off the table for years. In the biotech world, cash is oxygen. Without it, the science dies. Wave has just secured a massive tank of oxygen, and the market is rewarding them for it today. There is a psychological aspect to this trade as well. We are seeing a fear of missing out, or FOMO dynamic, beginning to build in the RNA space. For years, CRISPR stocks were the darlings. But CRISPR has issues. It's expensive, hard to deliver, and permanent. RNA editing is the Goldilocks technology. It's just right. It's transient enough to be safe, but potent enough to be effective. As more generalist investors, who usually stick to Apple stock or Tesla stock, start looking for the next big thing in healthcare, they are landing on RNA editing. You can see this in the chat rooms and forums on investing sites. The conversation is shifting from, "What is this company?" to, "How much exposure should I have?" However, we must remain grounded and look at the risks. Reality check time. This is still a clinical stage biotech. They are not profitable. They are burning millions of dollars every quarter. If the Phase 2 data for the obesity drug shows a safety signal, maybe it affects the liver, or maybe it causes nausea worse than Ozempic, this stock could get cut in half overnight. That is the binary risk of biotech. You do not get this kind of volatility with a Schwab Intelligent portfolio holding an index fund. You're taking on idiosyncratic risk. The 7% gain today could be a 15% loss tomorrow if a single patient in a trial has a bad reaction. You have to size your position accordingly. Do not bet the farm on a single binary outcome, no matter how good the science looks. Let's talk about the retail access to this trade. It has never been easier for an individual to buy into a complex story like Wave. Whether you're using the Robinhood app for commission-free trades or the more sophisticated tools on the Fidelity trading platform, the barrier to entry is zero. This accessibility is a double-edged sword. It means that when momentum hits, it hits hard because thousands of retail traders can pile in at once. But it also means the exit door is narrow. If sentiment turns, the rush to sell can cause liquidity gaps. We saw this with other high-flying biotech names in 2021. You need to be using